So today we're going to have a look at some questions regarding drafting and interpreting financial statements. So this is an AAT Q2022 exam. So I prepared some questions that we're going to walk through today. So hopefully I'm going to give you that additional sort of commercial aspect knowledge as to why we do things the way that we do. So just adding that paper knowledge to actual real world knowledge to help you understand some of the questions that you get asked in that exam. And we're also going to cover quickly some of the areas that students really fall down on. So I've looked at the examiner's report and we're going to read that first, because if I was doing the exams today, I would almost deconstruct where other students are falling down in the exams and look at that, those areas first to make sure that I understand them, and then I would look at more of the easy stuff, shall we say. So we're going to tackle this head on. So let's get started and look at the computer now. Right, so here are the areas that students need to work on according to the examiner's report. So let's have a quick swig of coffee. So firstly, the statement of cash flows. So what was said was that many students find it challenging to prepare a financial statement of cash flows, often making errors in classifications and calculations, and it's identified as the weakest area in the exam. So I can really understand why this would be an area that people fall down on, because I remember it taking me a good 3 or 4 years to get this really ingrained in my head as to why we worked things out the way that we did and how we could get to the end cash flow, because there's 2 different ways of preparing a cash flow: the direct and indirect method for one, just to add a layer of complexity, and also that depends on how you sort of calculate this in a way. So we're going to go through some questions there. The second area is IFRS conceptual framework. Tasks involving the IFRS conceptual framework tend to have weaker performance, indicating that students need to revise these areas more thoroughly to understand the fundamental principles and concepts. Now I get that as well, because unfortunately I find even now, looking back at this exam, that it is very wordy. So if you're not, I want to say that way inclined, but I mean, if you struggle with very wordy sort of exam questions, and you prefer the number side, then I would say that you're going to, struggle with this particular area. So we're going to go through a couple of questions there. Next, we've got accounting treatment of financial elements. So students often struggle with the accounting treatment of different elements within the financial statement. So this is just posting, this is just double entry, so we can solve that. Do not worry about that. But ratio analysis, I hated ratio analysis, I'm not going to lie. Now, while students generally understand how to calculate ratios, they often fail to provide comprehensive analysis. Specifically, they need to improve on explaining the implications of the ratios and making valid points to achieve full marks. So I think here, the only way that you're really going to understand how to prepare an answer for ratio analysis is not to copy and paste the formula. I would say it's more that you need to really understand what point you're trying to make with the information that you have. So we're not going to get time to cover that in this first video, so maybe I should do a part 2. And I do already have a couple of videos around racial analysis already anyway, but we can definitely look at that in more detail, and I think it needs that time. It's not something that I picked up instantly when I was studying, so we'll go through that in a bit more detail. But firstly, let's have a look at some mock exam questions. So with the purpose of financial statements, one of the things that I can almost guarantee that you're going to get asked is basically working out the correct formula with the accounting equation, and it could be from the income and expenses side of things, or it could be from the asset, liabilities, equity side of things. So if you think of, I would literally imagine an income statement. So you've got income at the top, expenditure, net profit. So how do we work out if we've got a net profit or loss? Really easy, it's just going to be income minus expenses. That's going to get you your profit or loss. So I can already tell you that this top one is definitely correct. There could be more than one correct answer, so that's something else that you need to be watching out for in the exam. So assets minus expenses equals profit or loss. No, they don't. assets are on the balance sheet, which is a separate piece of paper if we were thinking about this, assets plus expenses equals profit or losses. Again, that's not the case. So if we think about the profit or loss that we come to after working out income minus expenses, that profit or loss is going to be transferred onto the balance sheet as total cumulative profit or loss or retained earnings carried forward. So it's not going to be impacting assets here. Income plus expenses equals profit or losses. No, it doesn't. Again, income minus expenses equals profit or losses. So the correct answer can only be this top one here. Now, what they also might ask you, not in this one, but in another, is what is the accounting equation? So I think we've actually got a question on that in a second that we'll look at, but let's move on. So again, I'm going to just hide the other questions for now, so as not to confuse anybody. So don't look at my screen, not that you can. So select the correct answer. Now, what we've got is we've got assets, equity and liabilities. So the accounting equation is going to be assets at the top. So imagine this piece of paper. We've got assets up here, and then we've got liabilities and we've got equity. Now, if we add equity and liabilities together, that's going to give us assets. So if we think about that, if we just did a little formula on here and added our equity and liabilities together, if those equal our assets, then it's going to be correct. So this top one is correct, and these three are not. So that's a really, really easy way of doing that. So again, assets, A, equals liabilities plus equity, and that is the accounting equation. Simple as that. Don't overcomplicate it. So let's look at the next question. What are the two fundamental qualitative characteristics? So these are going to be relevance and also faithful representation. So they're different to the enhancing qualitative characteristics. So these two are the fundamental qualitative characteristics, very different to the enhancing qualitative characteristics. Quite a mouthful, but just remember FR. So if we're talking about the two fundamental qualitative characteristics, FR, faithful representation and relevance. So let's move on to the next question. What are the four enhancing qualitative characteristics? So I have a little acronym for this, which is CUTV, and that's always helped me to remember what they are. So we've got comparability, understandability, and then we've got timeliness, and then we've got verifiability. So again, talk back to me. CUTV, so comparability, understandability, and then we've got timeliness, and then verifiability. So again, going back, just repeating and repeating. This is the only way sometimes that you're going to get this down to a T when you're first starting out. So two fundamental qualitative characteristics, FR, FRA, faithful representation and relevance. Four enhancing qualitative characteristics, CUTV, comparability, understandability, verifiability, timeliness. Done. So let's move on to the next question here. What if we're asked to describe the four enhancing qualitative characteristics? And again, remember CUTV, so comparability, understandability, verifiability and timeliness. So if we looked at comparability first, comparability allows users to identify and understand similarities and differences between each year or each period. Now, this ensures that the financial information can be consistently compared over time and also across different entities. If you really wanted the complicated sort of textbook answer, but essentially it allows us to look at one period to another and understand similarities and differences. So understandability, this essentially means that financial information is presented clearly and concisely, making it comprehensible to users. And obviously the users of the financial statements could be different stakeholders that we know of. So it could be employees, it could be external stakeholders such as suppliers, etc., customers. Now this helps users to effectively interpret and use the information for decision making. So timeliness next. So timeliness ensures that financial information is available to users in time to influence their decisions. So if you were providing a set of financial statements 2 years after the period end, there would be no point in looking at those financial statements because, you know, it's history, it's been and gone. We can't make future decisions off that information because there might be more relevant information to us now. So it's really important that timeliness is taken into account, and that's why it's one of the enhancing qualitative characteristics. Verifiability next. So verifiability means that different knowledgeable and independent observers can reach a consensus that the information faithfully represents what it purports to depict. So this essentially helps users of the financial statements know that the data in there, the financial information, is credible and reliable. So if it wasn't, again, we would not be able to use those financial statements to make decisions. And this is the recurring theme of all of these qualitative characteristics, that the information that we're reviewing or that that stakeholder is reviewing is ultimately to make a decision. So if that information is not verifiable, so we can't rely on it, it's not credible. If it's not timely, so it's not, you know, the latest information, if we don't understand it, and if we can't compare it to something else, it's not going to help us make a decision. So I hope that helps. So our next question here is, what is the accounting equation? We've already been through this once. So the accounting equation is, again, assets equals liabilities plus equity. So liabilities plus owner's equity. And if you ever see, I think Xero do this, if you use Xero to prepare a set of financial statements, in the settings of those financial statements, you've got option 1 or option 2 in terms of presentation of the balance sheet. And this will either give you assets minus liabilities equals equity, or assets equals liability plus equity. So sometimes in the exam, they try to throw you off a little bit, and they will move that formula around and ask you to work out if it's correct or not. But what I would do in that situation is always go back to the original equation, assets equals liabilities plus equity, to work it out. And it's very similar to when you did algebra in maths in school, where you took one bit off and put it over here, and one bit off over here and put it over here. But essentially, if you just remember this core accounting equation, you can work it out. So this video has gone on for quite a bit, and I was going to go through the cash flow with you in this video, but I think we need to do that in another one now because of the timing of it. So yeah, I'm going to end the recording of this one here, and instead I will catch you on the next one. But as always, give the video a thumbs up, because the more people that like the video, the more it can get pushed out to students who need this sort of information as a free resource. And also make sure to subscribe or follow for more videos. So yeah, I'll catch you on the next video.